All right, good evening, everyone, and welcome to the October 26th edition of Office Hours. My name is Dr. Tisa Silver-Kennedy, and I'm so happy to be with you all tonight. If you would give me just one moment, I'm going to go ahead and share my screen, and then we can take a look at the questions that have come in from our community. There's been quite a bit going on in the student loan space as of late. So exciting times. Have some updates for you and others that I'm going to have to do a little bit more digging into and then share in greater detail when we get back together in a couple of weeks. So before I go into the questions for this evening, I just wanted to share with you a bit about the Maryland Center for Collegiate Financial Wellness, then a bit about the Office Hours program, and then some questions from our community. I didn't have as many questions this evening, so I thought that it would also be good to spend some time focusing on getting in those public service loan forgiveness applications before the limited PSLF waiver expires on October 31st. So we'll definitely do a deep dive into that subject since the deadline is coming up just 5 days away. Right, so a bit about the Maryland Center for Collegiate Financial Wellness. We are a nonprofit organization started in 2001 on a mission to help students and families build their financial life skills and empower them to thrive. Our vision is that all college and career school students in the state of Maryland have the opportunity to be credit-worthy, ready, resilient, empowered, successful, and thriving. It's not enough to just train people to get by, but we want people to have the opportunity to live well, and we understand the connection between finances and overall wellness. So if you're interested in learning more about the center, please do visit us online at mccfw.org. We are also on Facebook at the Maryland Center for Collegiate Financial Wellness, as well as Twitter and Instagram at the MCCFW. Office Hours is one of McFew's programs. It's a free semi-monthly virtual student loan clinic that provides borrowers with a trusted venue to help them navigate student loans and prepare for financial success beyond repayment. We do our best to provide you the most accurate information possible. However, I must give you the disclaimer that Office Hours is for informational purposes only. None of the information provided tonight should be construed as financial or legal advice. And as borrowers, it's your responsibility to take in information from the Department of Education, your lender, your servicer, as well as other trusted sources like the center, and make the decision that makes the most sense for you and your household and your student loans. So we're grateful to be a part of the set of resources that you use when contemplating those decisions, but ultimately it's your decision. And we just hope that you are able to make a more informed decision because of your participation in Office Hours. So let's jump into our first question of the evening, which is, I keep hearing about $10,000 or $20,000 in cancellation. How can I tell if I'm eligible for any of it? And this question came up last week, well, 2 weeks ago, and I have a feeling it's going to keep on coming up. So I've kind of created this Q&A for people to be able to walk through a set of questions that will help you determine your eligibility for either the $10,000 or up to $20,000 worth of relief. So there are 5 questions here. The first question has to do with the types of loans that you have. The Biden-Harris Student Debt Relief Plan is currently available to people who have federally held student loans. If you're wondering whether your loans are federally held, one way to tell is whether the loans were included in the CARES Act forbearance that was implemented on March 13th of 2020. So if your loans were included or are still included in the CARES Act forbearance that went into effect on March 13th of 2020, then your loans are federally held. If you're still unsure about whether your loans are federally held, you can log into studentaid.gov and you want to look at the section that says View Loan Servicers. If your servicer has Department of Ed in front of the name of the servicer, then that means that your loans are indeed federally held. So if you're looking to verify the types of loans you have, you want to log into studentaid.gov and look at the My Aid section. So you can see the types of loans you have and then look at the servicers to determine if those loans are held with the Department of Education. The second question is, were your original loans dispersed before June 30th of 2022? One question that I'm hearing a lot is about whether people who just started college in the fall of 2022 would be eligible for this relief? And the answer is that if they are borrowing for the first time this fall of 2022, the answer is no. Their original loans would have been dispersed after June 30th of 2022. So this particular relief plan is offering cancellation for people who had loans that were dispersed prior to June 30th of 2022. If you're not sure about your disbursement dates, you can go to studentaid.gov once again, and you can look at the My Aid section. From there, you want to view the details, and then you're going to come to a section called the loan breakdown. When you view the loan breakdown, you can actually sort the loans by the date of the loan, and you can see if you have loans that were dispersed before June 30th of 2022. So the answer to that question is also found on studentaid.gov. Our third question has to do with the income cap. This plan is designed to give relief to people who've had their adjusted gross income in the years 2020 or 2021 fall under certain levels, and those levels are listed here on the chart. If you are a single borrower or a married borrower who files separately, then the income cap is $125,000, and that income cap can be for either 2020 or 2021. So I had someone ask the question this morning, my income was above $125,000 for 2021, but it was under $125,000 for the year 2020. Can I still get relief? The answer is yes, because in the year 2020, the income cap had not been exceeded. So either or, 2020 or 2021. For borrowers who are married and file jointly, the income cap rises to $250,000. And for borrowers who file as head of household, the income cap is $250,000. The income cap is based on your adjusted gross income. Your adjusted gross income can be found on your personal income tax return. That is Form 1040, line 11. So if you have done your research and found that your answer is yes to all three of these questions, then you should be eligible up to $10,000 worth of relief through the Biden-Harris Student Debt Relief Plan. Keep in mind that this plan is not providing any kind of cash relief to anyone. This is strictly a reduction of your existing loan balance. So if you owe $30,000 and you answer yes to all of these questions and are eligible for $10,000 worth of relief, you would apply, and after the application is approved, you should see your debt drop from $30,000 down to $20,000 because that $10,000 worth of cancellation has been applied. So no cash relief, just a debt reduction. Now, some borrowers are eligible for up to $20,000 of relief. So there are two additional questions to ask to determine if you are eligible for up to $20,000 relief instead of $10,000. First question is your balance on loans borrowed for your own education greater than $10,000? And this question is really getting to the issue of parent plus loans, because some borrowers have parent plus loans only. And through this particular relief plan, the relief for people who have only parent plus loans has been capped at $10,000. However, if you have borrowed parent plus loans to pay for your child's education, and you've also borrowed student loans for your own education, you could become eligible for up to $20,000 based on the amount of your own student loan debt. So that's loans that you took out for your own education. So if the balance on loans that you borrowed for your own education exceeds $10,000, then you want to ask yourself one more question. And that question is, did you receive a Pell Grant? For both of these questions, you can go to studentaid.gov to verify. If you're looking for whether you received a Pell Grant, once you log into studentaid.gov, you usually come to a section called My Aid, and you'll see a blue circle that has your loan balance in the middle. If you received a Pell Grant, right next to that blue circle, this is the desktop version, right next to the blue circle, you're going to see a green circle, and the green circle contains grants. If there is a Pell Grant received, you should see Pell Grant underneath the green circle. So if the balance for your loans that you took out for your own education is greater than $10,000 and you received a Pell Grant, then you should be eligible for up to $20,000. So if you answered yes to the first three questions, that lets you know you should be eligible for $10,000. If you can answer yes to both of the follow-up questions, then that lets you know you should be eligible for up to $20,000. When it comes to the relief, again, this will be applied to your account as a reduction of your existing debt. It will not be, there will not be any cash distributions. Also, notice it says eligible for up to. This is for people who might owe less than the maximum eligibility amount. So if you owe $8,000 and you're eligible for up to $10,000, then you would receive relief of $8,000. The additional $2,000 would not come to you as a refund. You would just see your balance erased because you were eligible for up to $10,000, but you owed less than $10,000. So if you have not applied for relief through this program yet, you can visit studentaid.gov/debt relief. And the past few days when I have visited studentaid.gov, it has automatically directed me to that application. So if you visit studentaid.gov, you should see it. You can also visit studentaid.gov/debt relief, and you'll see lots of information about the plan, and also you'll be able to apply. The application is available and it is brief. You need to provide your name, date of birth, social security number, your contact information, and then you will have to check a box to attest to you having met the income cap requirements that are listed on the screen. So it's a very easy application. For many people, they've said it took maybe 2 minutes for them to complete, or definitely less than 5. If you have not completed it yet, I would encourage you to please visit studentaid.gov/debt relief and get that application in as soon as possible. The next question that I usually receive after this is, when is the deadline for filing this application? Because there are a few different deadlines floating around right now, and October 31st is the one that people have heard me talk about the most. But October 31st does not apply to relief through this plan. The Biden-Harris Student Debt Relief Plan, it's been announced that the application is going to remain open until December 31st of 2023. So if you have not filled out the application, there is still plenty of time, since it's scheduled to be out until the end of next year. But I would encourage you to fill it out as early as possible. The reason being is that right now we are still in the CARES Act forbearance, which means that many of us have not had to make a payment and have not seen interest accrue since March 13th of 2020. But that CARES Act forbearance is going to come to an end. It is set to end on December 31st of this year. So we've got about 2 months left of this CARES Act forbearance. If you would like to have the cancellation reflected in your loan balance before the CARES Act forbearance ends, then you should complete this application no later than November 15th of 2022. The Department of Education has estimated that the relief should be processed within 6 weeks. So if you complete the application by November 15th, then putting you 6 weeks out would take you to about the end of this year, which is the same time that this CARES Act forbearance is set to end. So once repayment resumes in January of 2023, it would be nice to have your student loan balance be one that's accurate and reflects the cancellation. So please complete that application as soon as you can. And if you'd like to have your balance updated by the top of the year, please make sure that you submit the application by November 15th of 2022. One more question that has come up, not frequently, I must say, is what if someone wants to opt out? The Department of Education has said that there is an option to decline this relief, and you would need to contact your loan servicer or one of your loan servicers by November the 14th of 2022 in order to opt out. This is particularly important for people who are set to automatically receive relief through this plan. Those are people who may have completed a FAFSA in recent years or have been enrolled in an income-driven repayment plan. And the Department of Education already has their household income information on file. So if you think that you are one of those people that might be receiving the relief automatically, check your email to see if you have received any messages from the Department of Education explaining to you that you could be eligible for the automatic relief. And that if you'd like to opt out, you need to do so by November the 14th. For everyone else, please complete the application as soon as possible, because it would be great if you could have a student loan debt balance that is accurate once repayment resumes early next year. Quick note about the loans, because it has been in the news. What's been in the news has been a few stories about people who have a particular type of loan. Those are called commercially held FFEL loans. FFEL stands for Federal Family Education Loan Program. So there's certain FFEL loans that are held by banks. And unfortunately, at this time, those loans, which are called commercially held FFEL loans, are not eligible for relief through the Biden-Harris Student Debt Relief Plan. They were at one point if borrowers consolidated those loans into the direct loan program, but that stopped September the 29th. So if you had not consolidated your loans before that day, and the loans are still commercially held FFEL loans, then they are currently ineligible for this form of relief. I want to be clear that those loans can be consolidated to gain access to public service loan forgiveness, which is a separate relief program. But as far as this Biden-Harris Student Debt Relief Plan, which offers up to $10,000 for some borrowers and up to $20,000 for some Pell Grant recipients, that's not an option right now for people with commercially held FFEL loans. The loans that are eligible for the program are listed here in the image: undergraduate and graduate direct loans, Parent Plus and Grad Plus loans, consolidation loans that had underlying loans dispersed on or before June 30th of 2022, Department of Education held Federal Family Education loans, so that's FFEL loans that are held by the Department of Education, Perkins loans that are held by the Department of Education, as well as defaulted loans, and that includes defaulted loans that are held by the Department of Education or commercially serviced, subsidized, unsubsidized, Parent Plus, Grad Plus, and Perkins loans that are held by the Department of Education. So if you log into studentaid.gov and look at your loan servicers, the Department of Education held loans will have Department of Ed in front of the servicer's name, or if they're in default, you'll see Default Management Collection System. So if you really just want to double check to make sure that your loans are eligible for this form of relief, visit studentaid.gov, take a look at your loan servicer so that you can verify eligibility. All right, so this is another question from the community. My repayment history is missing for several years. What are my options? This particular question actually came about from an application for public service loan forgiveness. In looking through the payment history month by month with the borrower, we saw that there was a gap in the history of several years. Now, when it comes to public service loan forgiveness is looking at employment history and repayment history after October 1st of 2007. So when they're going back to look at the history, they're looking at the employment that you provided documentation for, as well as repayment history. And if a person is applying through the waiver, they're looking at repayment status history. So they're not looking at actual payments. They're looking to see if the loans were in an acceptable repayment status. So that would mean they were in repayment. Certain forbearances might qualify. Certain deferments prior to 2013 might qualify. In-school deferments do not qualify. Months where the loans were in default, to my knowledge, do not qualify as well. But they'll be going over that history to see which months do you have the employment and the acceptable repayment history. And where there's overlap, you want to have 120 months. If you reach 120, that means that the rest of the debt can be canceled. But you have to have access to all of your history to make sure that you're getting a count that is accurate. And in the case of this borrower, we logged into Mohila's website and we went to the PSLF menu, and then we looked for the payment tracker. The payment tracker allows you to look month by month to see if a month has been determined as one that qualifies for public service loan forgiveness. And what we saw was that this borrower had employment certified, and then at one point, there's a 7-year gap in the repayment history. And we kept scrolling, trying to look for it, and could not find it. So that's 7 years. 7 years is 84 months of history that's just not appearing for some reason. So there's no way that this borrower can get to 120 when there are 84 months of history completely missing. And the question was, what should they do? So my instinct was to ask the borrower, what documentation do you have on hand for the payments? And fortunately, the borrower was able to locate some tax forms, 1098s, which are the forms that you receive when you have made payments on your student loans and your lender is letting you know how much interest you paid over the past year, because some of that interest might be tax deductible. So the borrower was able to find a few of those 1098s, but that still doesn't solve the issue of that repayment history being completely missing within the records of the servicer who's responsible for the count of seeing if this borrower has reached 120. So definitely thought that it was time to perhaps engage some outside parties to see if we can locate those records. So there are a few options for complaints. One is the Consumer Financial Protection Bureau. You can visit them online at consumerfinance.gov. Next, the U.S. Department of Education has an ombudsman. The questions that should go to the ombudsman are very specific in nature. So if you go to the Department of Education's website and look up the ombudsman, you'll see kind of a guide that helps you determine if your concern is one that should be addressed by the ombudsman, or if it's something that maybe you need to revisit with the servicer. In terms of public service loan forgiveness, there's also another option, which is filing a request for reconsideration. This would be something that you would do if the servicer came back with a count that you felt was inaccurate because something is missing, like repayment history. So this borrower definitely will file a reconsideration request. Also, in the state of Maryland, we have a student loan ombudsman who accepts complaints from student loan borrowers. And I just wanted to provide you with a list of problems that you may experience with your student loan servicer that the ombudsman can assist with. So here's the list. Failure by the servicer to communicate with the borrower, errors in crediting principal and interest payments, misapplied payments, inaccurate interest rate calculations, billing errors, loan consolidations or modifications errors, and or inappropriate collection activity or tactics. So the ombudsman is there for student loan borrowers in the state of Maryland. The ombudsman also has a student loan borrower's Bill of Rights. So if you are currently in repayment and you have a complaint about your student loan servicer, you can visit the Maryland Student Loan Ombudsman online and file a complaint through their form. Also, if you'd like to see the Maryland Student Loan Borrower's Bill of Rights and learn about the protections to which borrowers are entitled and the obligations of student loan servicers, you can visit the Ombudsman online through the Maryland State Department of Labor. So if you find something like this particular borrower, years and years of repayment history missing, I would highly recommend going through your own records to see if you have any documentation that you can provide just to show that payments were made, but also make sure that you reach out to your servicer to inquire, file a complaint with necessary authorities, and just try to find resolution. I'm hopeful that the records of this borrower's repayment history will turn up, and just mindful that there are a lot of things going on right now. There's a transition from one servicer, a Fed loan, to another servicer, which is Mohila, that will now be the sole servicer handling the public service loan forgiveness program. We've also had, the CARES Act forbearance. There are going to be some one-time adjustments. There's also one-time cancellation. There's just a lot going on in this space. So because so many things are happening at once, I would encourage you all to download your payment history from your servicers, so that if things get transferred to another servicer, again, at least you have your own records that can support your repayment history. But if you're interested in learning more about complaints or what the Office of the Student Loan Ombudsman for the state of Maryland is doing, you can visit them online through the state's Department of Labor. All right, so I mentioned PSLF, and here's a question about PSLF. Should I consolidate first and then submit the PSLF application? We are 5 days from the end of the limited PSLF waiver, and the limited PSLF waiver has really opened up the door for so many more people to have their debts forgiven. And I know everyone wants to do this, the right way to make sure that they're maximizing their chances for success. But the advice has changed over time. In the very beginning, the PSLF servicer recommended that you consolidate your loans first and then wait until the consolidation loan dispersed, which can take about 6 weeks is what we've been seeing as of late. So their advice was to consolidate, wait until the consolidation loan is dispersed, and then submit the PSLF application. But we've got 5 days, so that advice no longer applies. You really want to focus on getting your applications completed by October 31st, 2022, regardless of the order. If you have to consolidate, that application is online only at studentaid.gov. If you complete the application by October 31st, then you should be in the pipeline for the limited PSLF waiver, as long as you also complete the PSLF application itself. That application is also online at studentaid.gov/PSLF. Ever since the waiver is announced, the message that I and many others have been sharing is that you want to complete the PSLF application in its entirety and get it submitted by October 31st, 2022. That's signatures and all. But the Department of Education has updated their website to add that there is some additional leeway with the submission of the pages with the signature. So from my understanding, if you complete the PSLF application within the help tool by October 31st of 2022, and the application, and you don't turn in the signatures until after October 31st of 2022, then your application still should be evaluated under the rules of the limited PSLF waiver. So if that form is eventually accepted, they won't hold it against you that the actual signed application was not received by MOHELA until after October 31st. I have to tell you, anytime it comes to deadlines, I just want to be in, and done with it. So if at all possible, you can get the signed papers submitted by October 31st. I still recommend doing that just so you can have it over and done with. But if you're interested in learning the specifics of the deadline of October 31st of 2022, I'd encourage you to go to studentaid.gov/PSLF and read through the page that's specifically about the limited PSLF waiver. Because again, since last year, I've been telling people, get it all done. Use the PSLF help tool to complete the application. The first phase of the application, download it, sign it, get it to your employers, have them sign it and give it back to you, and get it to MOHELA, or at least send it to them by October 31st to make sure that everything is in the pipeline for the waiver. So now that we are 5 days out, it's, from what I've read, it sounds like there is some more flexibility, provided that you complete the PSLF help tool portion by October 31st. But if this were me applying, I would definitely want to get everything in by October 31st regardless. All right, so the next question has to do with Parent Plus loans. I have Parent Plus loans and loans for myself. Will my repayment history count or be reset to 0? So this question actually has to do with consolidation. And consolidation, it can be scary for some people, because when you consolidate, you are creating a new loan. Your old loans are going to be paid off and closed out. A new loan will be originated. And for some people, the thought of starting over fresh with a new loan and a new repayment term is enough to make them say, you know what, I don't want to do this. So I totally understand. So I wanted to take a step back and talk a bit about consolidation and what happens when you consolidate, and then what consolidation looks like without the waiver and what consolidation looks like with the waiver. So what is consolidation? When I mention consolidation, I'm referring strictly to consolidating federal student loans through studentaid.gov, not refinancing with a private lender. So If you visit studentaid.gov and you choose to consolidate your loans, your older existing loans are going to be paid off and a new direct consolidation loan will be originated. With the consolidation loans, even if you consolidate them all and there's multiple types, what they're doing is they're keeping the subsidized portion together and the unsubsidized portion together. So you might see two new consolidation loans. They're both direct, but one will hold the unsubsidized loans, the other will hold the subsidized loans. As for possible reasons to consolidate, for some people who have multiple loans and perhaps multiple servicers, they might want to streamline things so that there's one bill, one servicer. The other motivation is to gain eligibility for public service loan forgiveness, because some people have FFEL loans or Parent Plus loans that need to get on track for PSLF, and consolidation provides an on-ramp for PSLF. So from the dollar perspective, if you were to consolidate two loans, one loan for $30,000 and one loan for $40,000, those existing loans will be paid off, and then one new loan will be originated for the sum of those two existing loans. So we'll now have one new loan for $70,000. So for borrowers who have Parent Plus loans and their own student loans, they can consolidate to begin making progress toward PSLF. With Parent Plus loans, you have to consolidate them into the direct consolidation loan for them to get on track for PSLF. You could also place loans with differing repayment histories on the same PSLF clock, because usually people who took out Parent Plus loans went to school for themselves first. So they might have older loans that they took out for their own education and then Parent Plus loans that they took out for a child. Without the waiver, if you were to consolidate these types of loans together, the new consolidation loan would have zero history counted toward PSLF. So a person would be starting fresh with a new loan. First payment would be payment number 1 out of 120 needed to achieve loan forgiveness through PSLF. So the onus would be on that person to be enrolled in a qualifying repayment plan, to keep working for a qualifying employer, and submitting that employment verification every year as recommended, to keep their payment count updating as they work. And then once they reach 120 payments, they would submit the application again to have the remaining balance forgiven tax-free. So without the waiver, you can see how this could be scary for someone. In this situation, we have a person who has a FFEL loan with 110 months of history and a Parent Plus loan with 50 months of history. Once those two loans are consolidated, this is outside of the waiver. Once these two loans are consolidated, the direct consolidation loan would have 0 months counting toward PSLF. This is without the rules of the waiver. So they're starting fresh and looking forward, having to make another 120 payments while working for a qualifying employer to have a chance at having that debt forgiven by PSLF. So again, past payment history is ignored, new repayment term begins, and future qualifying payments and employment then can be used to count toward PSLF. In this example, we're assuming that the borrower had qualifying employment for all months, but without the waiver, that part wouldn't matter, because once they consolidate, the repayment term would reset and their first payment would be payment number 1. All right, through the waiver, borrowers who have Parent Plus loans and student loans that they've taken out for themselves can consolidate to gain credit for past payments that would not have been eligible for PSLF. They can also take loans that are on differing repayment clocks and bring them onto the same clock with PSLF in mind. So if we were looking at those same two loans, the Parent Plus loan with 50 months of history, the FFEL loan with 110 months of history. If these two loans are combined into a direct consolidation loan, the history of the Parent Plus loan is going to be ignored, and the history of the student loans that the borrower took out for themselves would be examined. So in this case, the FFEL loan and the Parent Plus loan are consolidated. The new direct consolidation loan will receive credit for the history that's attached to the FFEL loan. And we are already assuming that the borrower had qualifying employment the entire time. So if they had 110 months of repayment history, 110 months of qualifying employment, that gets applied to the entire consolidation loan. So automatically, these Parent Plus loans have been kind of brought in to the possibility of public service loan forgiveness In this case, it would be in 10 months. So the specific language from the Office of Federal Student Aid is your consolidation loan will receive credit for time and repayment on your loans with different counts. Your consolidation loan will be credited with at least the largest number of payments on the loans that were consolidated. So if we're looking at these two, because a parent plus loan is involved, the parent plus loan history would be ignored. That leaves the FFEL loan with 110 months of repayment history. The difference the waiver makes is that without the waiver, the FFEL loan would not qualify for PSLF at all. If a person consolidates that loan through the waiver by October 31st, then the FFEL loan can convert to a direct consolidation loan, and that repayment history on the FFEL loan can be considered as qualifying for PSLF. So the waiver is making a huge difference. And if you'd like to take advantage of it, you need to submit your applications by October 31st of 2022, which is next Monday, 5 days away. All right, in order to stay on track for PSLF, it is best to make sure that you are enrolled in a qualifying repayment plan. So I just wanted to share with you a list of qualifying repayment plans. The 10-year standard plan qualifies for PSLF. The income-driven repayment plans qualify for PSLF as well, and they're listed here. Income-based repayment, income contingent repayment, pay-as-you-earn, revised pay-as-you-earn. Also, there are some instances, doesn't happen, well, I haven't seen it happen too often, but there's some instances where there are other plans for which the monthly payment is greater than the 10-year standard plan. And if that happens, those payments could be eligible for PSLF. But your safest bet would be one of the income-driven plans because they do qualify for PSLF and they're most likely to yield a balance for forgiveness. So if you are getting on track for PSLF and let's say you know you don't have 120 months of repayment history or employment history, you want to make sure that your future payments are being set up to qualify toward PSLF. So it's best to enroll in a qualifying repayment plan before repayment resumes, and we're expecting it to resume in January of 2023. If you have Parent Plus loans and you are getting them on track for PSLF, or you're consolidating them with your own student loans to get them on track for PSLF, the only repayment plan available to borrowers who are including Parent Plus loans in a consolidation loan is ICR, which is the Income Contingent Repayment Plan. And if you'd like to know more about Parent Plus loans, getting them on track for PSLF, just visit studentaid.gov. You can search the Help Center to learn more about the treatment of Parent Plus loans. All right, next question is the waiver going to be extended, and how can I apply for PSLF if I apply after October 31st of 2022? Great question. So PSLF is not going to disappear after the waiver. It's just that the waiver is going to disappear on October 31st of 2022. So you can still apply for PSLF after October 31st, 2022, but all of the provisions within the waiver will not be available. There were some changes that were announced yesterday, and some of those changes are going to be permanent. From what I've read so far, the permanent changes are expected to go into effect. Pardon that delay. Those permanent changes are expected to go into effect July 1st. The waiver, though, is set to expire October 31st of this year. So there are some changes. I'll be able to speak on those a bit more at the next edition of Office Hours, but I just wanted to share with you the rules of the waiver, which are set to expire on October 31st, and what makes those rules so different from the rules of PSLF Basic, or the original version of Public Service Loan Forgiveness. So with public service loan forgiveness, there are 5 requirements. The first one is that a borrower has to make 120 monthly payments. The second is that those payments can be made on direct loans only. The third requirement is that the borrower has to be enrolled in a qualifying repayment plan at the time all the payments were made. The fourth requirement is that the borrower has to be working full-time directly for a qualifying employer at the time when those payments are made. The fifth and final requirement is that you also have to remain working for a qualifying employer at the time that you apply for and receive PSLF. On the far right, you'll see the provisions of the limited waiver. Just 2 requirements remain. The first is no longer 120 monthly payments. It's 120 periods of repayment. So the Department of Education and their servicer are not looking at your actual payments. They're looking at the repayment status history of your loans. So if the loans were in what's called an acceptable repayment status, then those periods of repayment can count toward the 120 you need to achieve PSLF. The second requirement, of course, is the work directly and full-time for a qualifying employer during those periods of repayment. So they'll take your repayment history, your employment history, and they'll look for overlap. And if you reach 120 months of overlap, then you have satisfied the requirement for PSLF. The remaining balance of your debt can be forgiven tax-free. If you have not reached 120, that doesn't mean all is lost. It just means you need to take the steps to make sure that your future payments can count toward 120 once the CARES Act forbearance is over and student loan repayment has resumed. The limited waiver is set to expire October 31st, and that is not going to be extended. The temporary expanded PSLF program, which is listed here in the middle, is something different, and it does not have an actual date on it that it's scheduled to end, but it's supposed to end when the funding that has been allotted for that program has been exhausted. So if you want to get the maximum benefit here and applying for PSLF, I would strongly encourage you to apply by going to studentaid.gov/PSLF and using the help tool to complete your PSLF application online. And then after you submit it through the help tool, download the PDF, sign the borrower page, which is page number 1, have your employers sign the corresponding page 2, get those pages back, and submit that form to MOHELA as soon as possible. And just keeping in mind, the waiver expires on October 31st. If you want to know more about what happens if you're not able to get a signature until after October 31st, please visit studentaid.gov/PSLF and look at the page that's dedicated to the limited PSLF waiver, because there have been some updates to that information. All right. So can't believe we're only 5 days out from the waiver expiring. So this will be the last time that I go through these 4 steps during office hours. But loan forgiveness through the waiver, I have like to think about it in a 4-step sequence. Just remembering that your eligibility for PSLF depends on your employment and your repayment history. So the first step that you need to complete is just make sure that your employers are eligible, because without the eligible employment, there is no public service loan forgiveness. You can search for qualifying employers by using their EIN, that's their employer ID number, and going to studentaid.gov/PSLF. And underneath the star button for the help tool, you'll see some blue text that says search for qualifying employers. The next thing you want to do is view your loan types. You can do that within studentaid.gov. And if you have loans that are not direct loans, if you want those loans to be considered for public service loan forgiveness, then you would need to consolidate them. Hence step number 3, which is consolidate your loans if necessary via studentaid.gov. The only place to consolidate loans is studentaid.gov. If you go somewhere else to do it, it's quite possible that you're refinancing. And once you go from federal to a private lender, you lose access to federal student loan benefits, including PSLF and the Biden-Harris Student Debt Relief Plan. So make sure that if you have to consolidate, you're doing so before October 31st to get access to the limited waiver, and that you're completing the application through studentaid.gov. The 4th and final step is to verify your employment by completing the PSLF application, and this is probably the easiest part. That application is available at studentaid.gov/PSLF. You'll want to have the employer ID number for each qualifying employer you've worked for since October 1st, 2007, but keeping in mind that the only months will count are the ones where you have that qualifying employment and you have the repayment history. And please submit your applications by October 31st, 2022, so that you can get the maximum credit for that past repayment history by having your application evaluated through the rules of the limited waiver. And For the past year, we have been trying to spread the word about public service loan forgiveness and a limited PSLF waiver across the state of Maryland through a campaign called MD TAPS, which stands for Maryland Telepublic Servant. We've got 5 days left, but it's not too late. So if you know someone who works for government or for a nonprofit organization and you think they might be able to benefit from public service loan forgiveness, please do share the page with them. It's mccfw.org/MDTAPS. And we can continue to spread awareness up until this waiver expires, spread awareness about this time-sensitive opportunity that has brought many public servants closer to realizing federal student loan forgiveness. In the state of Maryland, we have seen more than 6,000 borrowers have their remaining debts cleared through PSLF, and that's been more than $400 million worth of loans canceled. So PSLF has been making a difference, and most of that difference has been made by the limited PSLF waiver over the past 12 months. So before I go, just sharing some resources with you. Studentaid.gov, of course, is the top place to go for information about your federal student loans. You can view your loans, you can access the PSLF help tool to complete the PSLF application and complete the application to consolidate online at studentaid.gov. I've just shared with you the MDTAPS online resource page at mccfw.org/MDTAPS. Please do share with a colleague and encourage as many people as possible to apply through this waiver by October 31st. 2 more resources here. One is the PSLF mega thread. This is a thread on Reddit where people are sharing information about their experiences real time with applying for public service loan forgiveness. So you can check out that thread, and the thread was created by the founder of an organization called the Institute of Student Loan Advisors. You can visit them online at freestudentloanadvice.org. Finally, the Student Borrower Protection Center has several resources available for student borrowers. There's a lot of information on advocacy there, but also information for borrowers who are looking to have their debt canceled. So you can visit them online at forgivemystudentdebt.org. Now, I breezed through all of this because I was looking at social media, checking the comments to see if we had any, and we don't. In Zoom, I'm seeing that we do not have any questions in the Q&A. So I'm hopeful that this means we have answered all of your questions, and that those of you who are eligible for public service loan forgiveness will make sure that you file your application for PSLF by October 31st and consolidate if you need to by that same date, October 31st of 2022. And since we have no questions in the queue and no questions via social media for the moment, I'm going to go ahead and conclude tonight's edition of Office Hours. Thank you so much for joining us here. And these office hours just won't be the same without the limited waiver, but I'm sure that there will be plenty of questions about student loans and new questions, as there were some changes that were announced yesterday. And as I mentioned earlier, I have more information about those changes in our next edition of Office Hours coming up in November. So in the meantime, if you have any questions about student loans, please do visit mccfw.org. We've got a contact sheet, a contact form out there on the website. And if you'd like to keep up with us for information about student loan repayment or decision-making about how to pay for your higher education experience, please do connect with us on social media at the MCCFW, and again at our website, mccfw.org. So I thank you so much for your time and for joining us this evening. And until next time, be well.